there. So many of you who have been following me on this channel have heard me talk about the credible threat theory many times. Now, the credible threat theory is how the Federal Reserve is using their words more than their actions in order to conduct monetary policy. And one of the things that I have come across was some of the information that had been actually linked to some of the speeches that I have covered here on this channel, talking about how it is that the Federal Reserve is using their communications in order to get the markets to essentially predict what it is that the Federal Reserve is doing. And that is that policy. That's the monetary policy, is that prediction that the market is making based on the idea of what it is that the Federal Reserve is doing. Now, I came across this from Alan Blinder. This was like quite a while ago. It says the cacophony problem is a specific challenge when the broader study of central bank communication, which has been studied for many prominent economists, including former Fed officials. So now, understanding that the idea of the Federal Reserve putting out so much noise that it actually creates a confusion amongst the market, like they have studied this just in itself, right? It goes on to say the related empirical work uses detailed calendars of the Federal Reserve governors to document the link between interactions among policymakers and the flow of information to markets, suggesting a mechanism for these informal tasks, or for these informal leaks. Now, understand that they are studying this, specifically, that they are looking at their communications and how the market is reacting to that. And this study has been going on for quite some time. I mean, this particular piece was coming out in 2020. So when I think about how it is that the Federal Reserve has communicated over the last 6 months to a year, I mean, think about all the fear, uncertainty, and doubt. Like, just type in Fed and uncertainty and go and look at the news links, and you will find article after article after article. In fact, I had done a video where I was showing just about every single Fed governor and FOMC participant, policymaker, had essentially done an interview, or there was some sort of article written about them, and the word uncertainty was included in it because they wanted everybody to feel that fear, uncertainty, and doubt about what it was that was taking place within the monetary policy. Now, when I bring up this article, it's Reuters, and I'm not sure if I left a link down in the description. If I didn't, I will go and get the link and I will put it there. It's titled "Flurry of Fed Dissents in Coming Meetings Could Pose Market and Political Risks." Now, something that I found very interesting is, as I started to go through this article, is it recognizes that the Federal Reserve is generally all on the same page. Like, there's very, very rarely do you have any kind of dissension taking place within the ranks. Essentially all the FOMC generally lined up together and they vote together along the same view. But it's only just recently that we've had dissenting votes. Right? And this is something that is fairly new to the Federal Reserve. It's not something that is new in the sense that they couldn't do it before. There has been times in the past, but it was very, very rare that it actually took place. However, if they are using that dissenting votes as a monetary policy tool to create the confusion, fear, uncertainty, and doubt, and that is part of the credible threat theory. Right. So now here in this Reuters article, it says this: the U.S. Federal Reserve sometimes criticized for being too consensus driven. That's right. They were generally always on the same page. Many see a run of divided votes on interest rates that could weaken its policy message and intensify doubts about its independence from a political influence. Now, I find that to be a little misguided on the understanding of how it is that the Federal Reserve is using their words more than the actions. They're using their words. And as people look at that and say, oh man, this dissension is going to cause this confusion that people won't trust it anymore, I find that to be very inaccurate. Right? The people are hyper-focused on everything that the Federal Reserve does. And if they were to deliver a message that is more confirming, the markets would eat it up, right? It says here, a divide among Fed policymakers has emerged since summer as progress on inflation was stalling, just as job creation was losing steam, putting the U.S. central banks 2% inflation and maximum employment goals in direct conflict. Now, again, this is something that we have tried to recognize here on this channel many times, is that the Federal Reserve, hold on one second, make sure, is that the Federal Reserve is conflicted in their monetary policy, and what is it they're going to do? Try to fight inflation or try to support the labor market? But we have come up with ideas here within, not just ideas, I mean, recognizing what it is that the Federal Reserve is doing, that they can operate both these things at the same time, constricting the balance sheet of the banks, at the same time delivering cuts to the Fed funds rate. So basically putting out the statement they're doing a job of easing monetary policy, which isn't really easing, it's making it less restrictive. And at the same time, tightening up the banking conditions or the balance sheets regulations of these big banks. And so they are actually raising interest rates in a shadow tightening system. Anyway, the divide among Fed policymakers has emerged since summer. A progress on inflation was stalling just as job creation was losing steam, putting the U.S. central bank's 2% inflation on and maximum employment goals in direct conflict. So again, I find that to be very misguided in its understanding. The Federal Reserve knows that they are not going to be able to achieve a 2% target. They've never done it in the past. There's no reason to think they can do it in the future. And so they have stated in the past they would rather be too high than too low, right? Now, moderately restrictive, how is it that we know what moderately above 2%? But essentially, the Federal Reserve had been running consistently and persistently below the 2% target, never once ever achieving a constant 2% target. And so now what they said their problem would be, or the problem they would rather have, is that inflation that is persistently too high than too low. With it too high, they can conduct their monetary policy. When it's too low, it interferes with the ability for them to conduct their monetary policy. I know that's really difficult for a lot of people to wrap their heads around when I start diving so deep into this stuff and it starts piling up and it's all of a sudden your head just starts to spin on all this stuff. But to know that the Federal Reserve was looking for inflation to be somewhat elevated above the 2% in order to conduct their monetary policy. And when you have unemployment that is still running historically low, it's essentially they're achieving their monetary policy even as they speak now. Even though a lot of people say that they're not doing it, they essentially are, right? This is where they wanted to be. It goes on to say here, the recent government shutdowns complicated things further by delaying the data that might clarify the economy's direction, leaving policymakers ahead of the December 9th to 10th meeting with fairly fixed and deeply split positions over whether the further rate cuts are needed to help the jobs market or too risky given the still elevated level of inflation. And so again, this is the general view of the economy, of the market out there when they look at the Federal Reserve, is that they're stuck in this position, and that's why you have all this dissenting votes. But ultimately, they're very much in a position in which that they wanted to be, right? Low unemployment and inflation slightly above that 2% target, the target that they've never been able to achieve. It goes on to say, this month's meeting seems likely to produce several dissents regardless of the outcome. As many as 5 of the 12 voting policymakers of the central bank's rate-setting Federal Open Market Committee have voiced opposition to or skepticism about cutting rates further, while a core 3 members of the Washington-based Board of Governors wants rates to fall. So here it is. You got these 2 different directions in which it is that people are feeling, or at least the voting members of the FOMC are feeling about the current conditions in which, the interest rate adjustments need to go. This is creating the open-endedness. This is the open-endedness in which that the Federal Reserve is now put into the market's perception in order to prevent them from believing that it's going to be one direction or the other. If they were very confirmed about the idea of an interest rate cut, say with like a forward guidance position where the Federal Reserve literally says, hey, we are cutting at the next meeting, maybe not tell you by how much, but there's definitely an interest rate cut coming. That's forward guidance. The markets immediately start to incorporate that into their positions. However, if you have such dissent, happening within the Federal Reserve's communications, then what it's going to leave is a very open-ended monetary policy. So now when they go to their meeting, people are going to have no idea on what it is that is going to take place. This is how the Federal Reserve is conducting their monetary policy. They are getting close to neutral. They don't want the markets to be moving dramatically in one way or the other, or they would be delivering a message of confirmation. Okay? This is important to understand. Like, I don't know how clearly I can make this because it's very confusing, but to know that they're speaking the words of what it is that they want the markets to feel prior to the interest rate adjustment, if there is one, right? Or if they want to get less or more power out of it, they would give that forward guidance. You might see that the latest groupthink you've seen, and you might see the least groupthink you've seen in a long time. This is the Fed Governor Christopher Waller said last month amid speculation that the December meeting could produce 3 or more dissents in the Fed if the Fed approves another quarter-point cut. As expected by the financial markets, the FOMC has not had 3 or more dissents at a meeting since 2019, and that has happened just 9 times since 1990. Now, understanding that this is very rare, that they would have this amount of dissenting votes within it. Most of the time, they're always very much in line. So this is part of their tool. This is part of how it is that they are conducting monetary policy. And I know it's difficult to wrap your head around, but once you see it, once you recognize how they are doing this, it begins to make a lot more sense. Goes on to say here, Fed Chair Powell has not steered expectations. Again, he is the spokesperson, so he's speaking on behalf of the FOMC. He has not steered expectations about the December meeting one way or the other. That's how all these other Fed officials come out and speak at the same time. This is creating that cacophony problem in which that there is so much noise now being spoken out there within the mainstream media that people can't hear through it, and there is no clear message delivered because that will be coming from Jerome Powell. He is the spokesman of the FOMC. When he speaks, he's speaking on behalf of the entire group. What is he saying? He has not steered expectations about the December meeting in one way or the other. You see how these other Fed officials come out, make all this kind of noise. Meanwhile, the one person who is speaking on behalf of the FOMC is really quiet. This is how they do it. They're trying to create the confusion inside of the market's perception in order to make sure that they keep it open-ended, right? That's the important part. They do not want the market to be convinced one way or the other. If they did, they would have delivered a clear message about the future. Analysts see a reduction in borrowing costs as the likely path towards compromise. If coupled with language in the FOMC's policy statement and from Powell in his post-meeting press conference that a pause in monetary easing was then likely. You see how they're already expecting the words and how it is that they are going to deliver a message with it is very important. That message is by far the most critical part. Right? And again, we're going to share why it is the most critical part. In their final comments before the communications blackout for the upcoming meeting, rate cut skeptics said that they were keeping an open mind, while Waller, who was pushed for reductions in the borrowing costs since sensing the job market slowdown last summer, agreed that cuts beyond December would hinge on the large amount of data about to arrive as statistical agencies fully catch up with the record 43-day U.S. government shutdown. So essentially, even Waller is saying, yeah, this one's cut, but the next one after that, we don't know. The reason why they don't know is because that neutral interest rate is moving ever closer to the Fed funds rate. As the Fed funds rate are moving down or the neutral interest rate is moving up, they're getting ever closer to neutral, which is exactly where they want to be. They want to be at neutral. Whether neutral finds them or they find neutral, one way or the other, that's what's taking place. If you have credible threats of tariffs going into the future, you're going to raise the neutral interest rate. If that is to take place going into the future, along with this next interest rate cut, we very well could find ourselves, or the Federal Reserve find their monetary policy at neutral, which is exactly where they wanted to be. We'll see what the statement is. Do I agree with it or not agree with it? Chicago Fed President Austin Goolsbee said in a comments to reporter recently, I do think that there is some value to the Powell approach, whatever, I love that one. Can we build a consensus that everyone or a lot of people can agree with? Disagreeing while maintaining influence. The Richmond Fed President Thomas Barkin said last month that the focus on who dissents and who doesn't can miss a critical point. Dissenters might surrender influence. Quoting, starting with former Fed Chair Ben Bernanke, there's been this theory that if you can clearly articulate the path forward, then markets can do a lot of the work for you. And that presumably a more unified committee helps create confidence. This is Barkin who said this. I've not always agreed in meetings, but when I voted, I have voted with the chair. I always had the objective just to have influence. This is going on Waller. Right? If it gets really down to 7-5, then one person switches and the whole trajectory changes, he said. That's kind of danger with these kind of razor thin one vote things. It doesn't give people confidence. You see how they just keep that, like, to me, this is definitely part of the plan. Like, I could keep going, but you guys, I think, are getting to the point of this. Like, how is it that they are creating the confusion within the market's perception of what it is that they are doing into the future? Now, I have shared so many times on this channel how it is that the Federal Reserve has communicated this many times in the past, right? Oops. All right. So I love this speech given by Philip Jefferson, May 13th of 2024. And the reason is that this speech is now, over, it's over a year and a half old, almost going on, it's about a year and a half old. Far before all this dissension talk, right? Way before all the talk of dissent and, all the, disagreement in the Federal Reserve fighting and all that other stuff, before any of that stuff, a year and a half ago, this is what the Federal Reserve was saying, communicating inside of a speech. It says, the potential for misinterpretation is especially acute when many policymakers speak at the same time and disagree with each other. That's happening right now. It wasn't happening back then. Like, they might have come out a little bit and said some things that were somewhat disagreeing, but we never had such massive dissent, or at least talk of dissent. This was part of the ploy. This was part of the game plan. This is part of the strategy on how it is that they are delivering monetary policy, is by having many Fed officials come out and have misinterpretation that is especially acute when they speak at the same time. Many of them, right? This cacophony problem that they are essentially created, that they knew that they would create as part of their monetary policy. Again, I brought this up many times in the past, and back when we read this speech, it says, man, look at what they're doing here. They are creating confusion on purpose. It goes on to say this, the diversity of viewpoints among policymakers lends itself to stimulating debate. How many articles, how many people are talking about it, how much of this dissent communication is being, pushed out there through the mainstream media. This is part of it, the stimulating debate, and ultimately, better policy. It's better policy for them because now they can get more power out of it. Whether or not they're trying to stall or whether or not they're trying to ease or tighten financial conditions, they can do it with their words. They can do it with this cacophony problem of creating so much noise that nobody knows what's going on. It works the same as essentially not doing any kind of communication at all. They could have been just silent and had exactly the same reaction out of the markets. They could have done the exact same thing by being completely quiet. Think about that. When so many of them come out at the exact same time and communicate, people think that they're trying to be helpful and useful by giving their opinion out there. They are literally trying to confuse the market so much that they don't make a decision one way or the other. It's as if they didn't say anything at all. And that's their strategies. This is what they have communicated. Right? Jefferson goes on to say this in Textual Analysis of Central Bank Communications. This was given February of 2025. And it says, this is why I just absolutely love going through these speeches, because it says right here that the data, this research shows that investors' reactions to specific sentences communicated by the central bank are quickly incorporated into asset prices. They know, the central bank knows that they can use specific words and sentences. They know that they can use this cacophony problem. They know how it is that they can alter the market's perception. It goes on to say, policymakers know that their communications are likely to affect the course of short-term interest rates and other asset prices and the associated economic outlook, resulting in an easing or tightening of financial conditions. This is how the Federal Reserve is conducting their monetary policy. I know it is so backwards thinking from what a lot of other people have communicated, especially when you're watching from the mainstream media or listening to a lot of the talking head pundits out there who are trying to explain what it is that the Federal Reserve is doing or what they're up to. Very, very rarely will you find anybody communicating what it is that the Federal Reserve has spoken for their strategies, talking 20 years ago plus, right, leading up to this very day, putting these speeches together to prove to you that they are now using market perception as the main policy tool. This is absolutely the way that they are conducting themselves. The fact that they have such massive dissent that has taken place within the Federal Reserve's communication is part of the policy tool. They told us they were going to do this over a year and a half ago. Jefferson explained it in a speech. I've tried to share it several times here on this channel, and I mean several times, like 100. You know, in order for people to recognize when this exact moment takes place, that they know that this is not something that is screwed up, messed up, but very much a strategic part of the Federal Reserve's plan in order to create this cacophony problem that they knew would take place in their communications if many of them came out and talked at the same time, and they would use that open-endedness for their monetary policy. Bang, this is happening right now. Nobody's going to see it this way, I get it. Right? I'm like literally the only one who's going to put it together in this fashion. But as you start to piece together the credible threat theory through the words of the Federal Reserve itself and the speeches that they have given and the documents that we have collected here, all this stuff really starts to line up and make a lot more sense. I mean, just the idea of the Federal Reserve being in a neutral position is so far off from anybody's idea of what it is that the Federal Reserve is even attempting to do. They don't have any idea what the neutral interest rate even is. Right? And this is scary for, I mean, in my mind, that it leads me to believe that very few people out there actually have gathered a true understanding of what it is that the Federal Reserve was attempting to do with their monetary policy. And because they have essentially fallen into the trap of believing how it is that the Federal Reserve had operated with the interest rate adjustments and that being the main policy tool, that misunderstanding, right, that shift in how it is that the Federal Reserve communicates in order to create the monetary policy they are looking for, as opposed to the actual interest rate adjustment. Because everybody, like 99.9% of the people, are focused on the interest rate adjustment. They're focused in on the mechanics of the Federal Reserve's operating. They very, very, very rarely take it into consideration that it's the Fed's words and the market's perception that's the main policy tool. I've shared it so many times. I've tried to bring up as many documents and showing how it is that the Federal Reserve has communicated this to be what it is that they plan on doing going into the future. Having elevated inflation, especially elevated inflation expectations in the current form, and a long-term locked-in inflation expectation of 2%. They've achieved both of those things, right? Slightly elevated inflation, which is what John Williams' monetary policy strategies for a low neutral interest rate world stated back in 2018, that the problem they would rather have is a risk of inflation that is persistently too high rather than too low. At least with too high, they can conduct a monetary policy. Too low, it was out of the game. So the Federal Reserve knows that they are not able to achieve a 2% target. They never have, never will, but they do want inflation moderately, slightly above, or within reason of being elevated above that 2%. That's the policy that they would rather have. This is what they got. They're here now. To think that they didn't want this is very inaccurate. I mean, the Fed stated it. Even the idea of opportunistic reflation. You want to Google something that's going to blow your mind? Do that. Google opportunistic reflation and go and read Lael Brainerd's speech about how it is that the Federal Reserve was hoping for a just, happen chance that an inflationary shock would just happen to hit the economy, and boom, now what, a year later it took place with COVID. So, to think that the Federal Reserve was not taking a inflationary scenario as a blessing to save their monetary policy, I mean, you're looking at it wrong, because it totally was. All right, that's exactly what it was for the Federal Reserve, was a blessing in disguise. And as many people say, oh my gosh, how could you ever call COVID a blessing? Just look at the Federal Reserve and how it was that they were stuck at the lower bound of zero with no real way to stimulate the economy, because the neutral interest rate was close to that zero level. The only way to get that up was through elevated inflation and inflation expectations, and they totally got it. All right, I got a few more minutes here. Let's read through some of these comments. Thank you so much for everybody who has hit that like button. We got 113 people who have tuned in and 37 likes. Continue to hit that like button. Let's get all 113 of you to hit it. All right, we're making in halogen proof, or they don't make much of a living. I totally agree, Roger, but there are great talk regardless. People who do this for a living do get this. All right. You're deluding yourself. Okay. I don't know who. I mean, what I think is really interesting is people want to say, man, you don't have any idea about what it is that the Federal Reserve is doing or what they're up to. And I'm literally reading from like 50 different speeches and documents that come directly from the Federal Reserve itself. I don't bring in information from some like outside source that says, hey, man, this is what the Federal Reserve is really up to, and then it's their opinion, and then I'm delivering you information from their opinion. I'm delivering you from the spoken words of the Federal Reserve itself. Right? Like, you don't have to believe me. Just go and look at the words themselves that the Federal Reserve has documented that never seems to show up in the mainstream media. Like, people say, oh man, they're just lying. And I'm thinking, to who? Me? Nobody else is talking about this stuff, so they're lying just specifically to me? All right, Professor Simon, we're boots on the ground making this happen, baby. Yeah, thank you very much. Well, being that the measure of inflation is not measuring food or housing, and they probably incentivize the production of those, much does it? Okay. Yeah, I mean, I guess if you don't really want to follow the monetary policy or understand what it is that the Federal Reserve's next move is going to be, then yeah, you're right. It doesn't matter to follow the inflationary thing or even believe any of it, because there's no real point in even doing any of that if you're not wanting to understand the monetary policy or the Fed's next move. But if you do want to understand the monetary policy and the Fed's next move, you have to look at the inflationary scenario and the way that the Federal Reserve is looking at it. Doesn't matter how we want to look at it. We could tell them and wish and hope and dream to look at it differently. It won't do it. We have to look at it the way they're looking at it, and then go off of that assumption that that is the accurate inflationary numbers, so that they can continue to conduct their monetary policy, and we can understand what it is that they are planning on doing, regardless of it being accurate. I never thought any of the numbers were accurate. Never once have I. FASB 56 already eliminated the idea that I would trust the numbers. It's gone. I do not have any faith or belief that the government is delivering any kind of realistic numbers to us. I just don't believe it. However, I do like to understand what it is that the Federal Reserve is attempting to do with their monetary policy, and by looking at what it is that they are looking at, we have a better understanding of how it is that they are going to conduct themselves. Whether or not we want it to be different or not doesn't make any difference. right? It's all about how it is that they're conducting themselves and how we look at it. They are clear, and they don't mean what Simon says they do. Absolutely incorrect. They are very unclear about it. They have been very, very adamant about what it is that they are looking for with their monetary policy, but they are not very clear about delivering that message to the mainstream media. Now, you can say that I'm wrong. Well, that's fine, but you don't have any proof of me being wrong, and I got every bit of proof of me being right because I don't have to use my own thoughts. I can just take the thoughts and the words of the Federal Reserve and deliver that as my message and say, there is your proof. It's not me saying it. It's them saying it. All right? So say that they're lying and they're wrong and that they don't figure it out and they have no idea of what it is that they are doing, and then you can go and stand on the conspiracy theorist corner like everybody else does. All right. I bought a couple of cans of corn the other day, 88 cents. I remember a few years ago, and 10 years ago, it was 79 cents. Wow, that's a huge jump. Sorry, Wayne, that doesn't seem like a lot. The Fed is squarely focused on two things: price stability and full employment. Oh, yeah, I mean, I agree with that, and both of those things they have achieved. Right? I mean, both of those things they achieved. Simon says, fun game and gospel joke, of course. All right. I hate the game. What's happening, all-nighter? Yeah. Well, and that's just the thing. Like, a lot of times, it's easy to fall into the trap of they're doing this to make the people poor, and they're doing this with a designed application to the society that's going to enslave everybody in debt and all this other stuff. And I'm thinking, okay, well, that's true for the people who fall into it. But then again, if you truly understand what it is that's happening here, and you understand how the debt issuance work, and you know about being in cash flowing assets, and you're able to take advantage of the system to give yourself an incredible amount of flow, why wouldn't you, because you don't want to do it and they do, now you want to get mad at them for it? Well, I mean, it's just like, I don't know what to tell you, man. I mean, life isn't fair. I mean, you may not like the way they do it, and I don't really like it either, but it doesn't really matter what I like, is it? I mean, it doesn't matter what I like. What matters is how it is that I understand what it is that's taking place so that I can position myself for it. And knowing that there are people out there who are borrowing money to buy cash flowing assets, and then there's a whole other group of society who is hoping and wishing and dreaming that their day job is going to be enough. And I look down at the Cantillon essay of economic theory, and I think about new money pouring into the system that's separating the rich and the poor, and I don't see any reversal to that taking place going into the future. So my guess is we are going to have massive inequality going into the future, and the people who are going to get left behind are the people who do not get into assets. Get into assets or be left behind. That's it. We are now at that stage in the economy that if you do not take that sort of mindset of being able to figure out some way to get into assets, business opportunities or something, then most likely your day job will not be able to keep up and it will fall away. All right. And I mean, it's a bummer to think, but just think about how it is that the Federal Reserve is now conducting their monetary policy. They're using their words. They say that they are using specific words and sentences to tighten or ease financial conditions. It doesn't really matter what the interest rate adjustment is. We've already learned that. We've seen the Fed cut many times, only to find mortgage rates go up and banking rates go up and all this other stuff goes up, and people question what's going on. Why? Liquidity issues. Oh my gosh, and like the Fed's tightening too much, and now they have to go into quantitative easing. And they have all this massive paranoia that's taken place out there. Meanwhile, the Fed has communicated mostly everything that they have done. Now, they don't necessarily give you the exact description of what it is that they are going to do, but essentially they've talked about how it is that they are going to conduct themselves going into the future. The Bank Term Funding Program, which essentially when the banking crisis took off and the liquidity issues started to rise and everybody thought, oh man, these banks are all insolvent, The Federal Reserve had a tool called the Bank Term Funding Program that they deployed almost immediately. Like they had that thing sitting in the toolbox waiting to go. They can't communicate about that because if they told you what that was before it took place, you would incorporate that, you would price that into your strategies, and then it would not be an effective tool. These are the things that the Federal Reserve does on a regular basis that most people don't recognize. I got to go back to work. Uneducated Economist, you guys let me know.